You live in Switzerland and you want to start investing, but the system is just so confusing. In today's video, I will show you 5 simple steps using the exact vision framework that I personally use to grow my 7-figure investment portfolio from just 500. Hey, I'm Charlene. I'm your investment coach based here in Zurich, Switzerland. And this is the channel where I share my 10 years banking and investing experience for you all for free. Like and subscribe for more content like this. I see this all the time. So around 90% of my friends and family, or even more actually, failed here. So some people already invested, but they just buy some random stocks or ETFs and here and there. Or they follow the neighbor's crypto tip. That is not a plan. So start with this. Why are you investing? Is it for really financial independence, freedom? Is it for early retirement? Or is for your family's future or your kids' future? Living in Switzerland is really amazing, but it's not cheap. So your goals need to be crystal clear. They need to be personal and they need to be rock solid. And to be specific, for example, if you're 35 years old and want to retire in 10 years, you shouldn't invest like someone who is 40 and wants to buy a house in Zurich in 5 years, right? And another example, if you are investing for your 1-year-old child to be a millionaire in 20 years old, so you shouldn't copy a 55-year-old lady who wants to have a more comfy retirement life. But if you search online, it's just really a mess on forums, in Switzerland or elsewhere, like Reddit or even YouTube. Most advice is like, I would say, is very generic. There is a 99% of the chance, I would say, the advice you get online is not fitting your life. So seriously, my friends, don't skip this. Figure out your why. Define your investment values and goals. Short-term goals, mid-term goals, and long-term goals. Don't just say, oh, I want to get rich. I want to make money. So that is very vague. So be specific. Because if you skip this one or if you don't get this one correct, every other effort could be a waste of your time. Before we move on to the next point, next step, if so far this video is making sense to you, I'd love to invite you to my upcoming free masterclass. I will show you exactly how I built a 7-figure investment portfolio and quit my job, and how you can do it too. And spots are limited, so make sure to sign up now, and sign up link is in the description area. So now you know your why, and it's time to explore the how. And this step is all about awareness. You need to know what is out there. So most people actually only see a small piece of the puzzle. They stay in their comfort zone, and that is their blind spot. So some only know stocks, for example, and others only hear about cryptocurrency or real estate. But investing is so much bigger than that. You do not need to be a financial expert. You do not need to build really complex Excel, those formulas and forms. But you do need a holistic view. What I mean, start with the big picture. So what are the main asset classes? Stocks, bonds, real estate, commodities, cash equivalents, cryptocurrency, private equity, and so on and so forth. And then look at different investment instruments, ETFs, individual stocks, mutual funds, index funds, even the third pillar accounts. And after that, the platforms you can use, for example, Swissquote, Interactive Brokers, Yo, Saxo, Viag, for example. You do not need to master all of this, every single detail. But like I mentioned, you do need a holistic view. What's the cost? What's the risk? How liquid it is? How much effort does it take to manage it? So the point here is clarity. So for example, you are currently building your own investment toolbox, and the more tools you understand, the better decisions you can make, right? I see a lot of actually financial coaches out there or investment coaches out there, and most of them only teach you one thing, like how to invest in the ETF market, how to invest in the stock market, how to invest in cryptocurrency, and so on and so forth. And of course, they try to convince you that this is the best way to invest currently. But to be really honest, I'm sorry to say this, but it's just not the full picture. Every investment out there, as long as it exists for or it has survived for some time, exists for a reason. So it may not work for them, but it might be exactly what you need. And my friends, trust me, if you want to learn all the fundamentals of all the different investment options, trust me, you can learn them in just a few hours. Trust me, I'm not joking. You can really do it very quickly if you find the right way. Okay, step number 3. Now it's time to build on your investment strategy. And this is where the step number 1 and step number 2 come together. And based on your investment value and goals, step number 1, right? And your investment options, step number 2. So now let's build your investment strategy. And there's no one size fits all. It depends on you. So your income, your timeline, your risk tolerance. Start by asking, how much can I invest each month? And how long can I have my investments untouched? And how much risk can I truly handle emotionally and financially? And once it's clear, build your mix. So, for example, if you're a high risk taker, your strategy could look like 40% in the US equity, 25% in Europe, 20% in Asia, and then another 15% in cryptocurrency or some other alternative investments. If you're a more conservative investor, it could be something like 60% in stable markets, 30% in bonds or lower risk assets, and then another 10% in cash or cash equivalent. There's no right or wrong. It's like what we mentioned in step number 1, only what is right for you. And you can also layer your goals. For example, short term, you want to have some more stable assets, and long term, some more growth oriented assets. And keep it simple, my friend. You're not building a hedge fund, you're just building a plan that works for your life. And once you build your strategy, stick to it. Markets will go up and down. That is very normal. But discipline wins, not timing, not hype, not luck. Okay, step number 4, implementation. And this is the step a lot of people freeze. Oh gosh, they've done the research, they've already got the strategy, and they never start. Don't like that. Be you. Implementation here basically means taking action, right? Not tomorrow, not when the market is better. So start very simple. You open your investment account, you choose your platform, you fund your account, and then set up your first investment. You do not need to go all in on day one. I started with 500, like I mentioned, and slowly building up your investment portfolio is a better strategy. And here is the tip: automate it. Set a monthly transfer, set auto investments if possible. And the less you need to really think about it, the more consistent you will be. And you've already done the work in step 1, 2, 3, and now just execute. And don't get stuck in analysis paralysis. Perfect moment will never come. But the momentum will carry you forward if you take the first step. Okay, step number 5, optimization. You've already invested, you've started, and now let's optimize. So this is actually where small tweaks can lead to big gains over time. And first, really look at your fees: management fee, transaction fee, currency conversion fees, and so on and so forth. A lot of them, right? And then even 1% difference can cost you really a lot of money, like thousands or even more over the years. And lower is better, always. And next, you should consider tax efficiency. If you're living in Switzerland, you may want to take advantage of Pillar 3A. It can reduce your taxable income and grow your investments. You also need to know the different aspects, like how an investment portfolio can influence your tax situation. And also look at dividends, for example. Are they taxed as source? Can you reclaim withholding taxes through the DA1 form? And these little things just add it up. And one thing that I really, really, really want to highlight here, and I notice among a lot of my friends, especially those who are really detail oriented. Okay, that is this. They compare everything, every platform, every fee, every tax detail. And some of them, I would say, they know more than me, honestly, even. And about which ETF, for example, has the lowest fee and which platforms offer better currency exchange rates. But many of them, they miss the bigger picture. They forget about the personalized investment strategy that we talk about in the step number 1, 2, 3. So yes, optimization matters. Those little fees definitely they matter. But building a strategy that fits your life, it just matters more. Without that, you're just like fine tuning a plan that was actually not for you. So, you know what I mean? So, don't lose sight of the bigger picture. Start with strategy and then optimize, not the other way around. So, wealth building eventually is not a one time setup, it is a long term journey. So, keep nurturing your knowledge. So, AI is changing how we invest, and ESG is shifting where the money flows, and new tools, new opportunities, and new risks every single year. You do not need to know everything, but stay curious. Like I mentioned before, if you want to dive deeper into investing out of Switzerland and beyond, whether if you're an expat or a local, I would love to invite you to my free investment training. We'll go step by step through the full process, and I will show you exactly how I use this system to build a 7-figure investment portfolio and how you can too. So details are in the description. So go sign up now. Spots are really limited. So I will see you inside the training.